Alright guys, so it's almost 10 o'clock. I guess we can make a start. Welcome, it's Monday the 19th of November 2012. Hope everyone's had a really great weekend, but as usual it's time to get back to the grind, understand what's happening in the markets, and then hopefully we will be able to take advantage of some of that. As a reminder, the purpose of this session isn't always about calling the trades. It's more about defining the key lines and levels from where we should be able to get good risk-defined entries and just establish a net directional bias for the coming week. Just a quick glance at the calendar before we start looking at the charts. There was some relatively poor PPI data out of New Zealand overnight, so we're going to wait and see how that affects the Kiwi. Relatively light data today. There is some data coming out of the US, some housing starts data. Tomorrow on Tuesday we have minutes from the Reserve Bank of Australia. We also have a monetary policy statement from the Bank of Japan and their overnight call rate, which will be followed as well by the Bank of Japan press conference. The yen's doing pretty much as the Bank of Japan would like right now, so we will cover the crosses in today's session. Again on Tuesday, tomorrow you do have Eurogroup meetings, and as well we have Ben Bernanke speaking tomorrow evening. On Wednesday, and I reckon this will be one of the most closely watched events of the week, we have the minutes which will be released from the Monetary Policy Committee here in the UK, from the Bank of England, and as well we have the public sector net borrowing figures. Thursday is a Thanksgiving holiday in the States, and we also have a 10-year Spanish bond auction here in Europe, which again, we know these bond auctions traditionally they have caused a reasonable amount of volatility, and a lot of the markets look like they could do with an injection of something right now. Again, kind of lightening off as we go into the end of the week. On Friday, all we have on the slate is a meeting of the European Union heads of state, so it's an economic summit. They are going to be discussing Greece and Spain and the other peripheral countries, so we will wait for the outcome or the results of those meetings, and if they're making statements to the press in particular, if they say something out of key or out of line with the general expectations of the market, you can expect for some spikes in generally both directions. Okay, so let's turn our attention towards the charts. First up, we're going to be taking a look at the yen crosses. The yen crosses important because if we're looking across the board, these are the ones which have been trending the most. They've been showing the greatest sign of momentum over the course of the previous month, and now that we have this rather major event coming up later on tonight or tomorrow, depending where in the world you are, with the BOJ monetary policy statement, the overnight call rate, and the Bank of Japan press conference, it is worth highlighting some local levels on these charts and say, okay, at what point do we consider these instruments to have turned? So I guess what I don't have to mention to you about USD JPY is that the most recent momentum has been to the upside, and our only mission is to highlight the nearest support area. Once we've highlighted the nearest support area, then we're kind of good to go on this. And I like the structure on the yen crosses right now. It's very easy to decipher. So we have this block here which is coming in between. We have this block which is coming in between the 80-80 area and the 80-70 area, and it's where support has been established. As long as the price is able to remain above 80-80, 80-70, then technically, from a technical perspective, I would say that the bullish momentum on this pair is intact. We're still relatively near the weekly opening price, and so it is worth keeping an eye on that too, as far as establishing directional bias is concerned, right? So she's pretty much near where the week is opened. If at any time the week is turning bullish, then it would be worth giving that chase, looking for that continuation trade, and we would only consider that bullish momentum to have expired once the price has broken down through the nearest support level. So once she's broken down below that 80-70 handle. If we're taking a look at GBP JPY, and if we're taking a look at the Euro Yen, it's a fairly similar picture across the board on all of these pairs. So again, quite a steep bullish momentum here on Euro JPY, and if we just want to mark off the nearest support area, we've got that coming in at around about the 103 handle. As long as the price is able to maintain above 103 in the bottom of that range, seems to be coming in around 102.80, but as long as the price is remaining above that block, then it would not be fair to be considering that the price is breaking down and that she is heading south. And I guess this is the important issue. It tends to happen with a lot of traders that as the price is going up, you're always imagining that she's got to go down because she has gone up, but quite often if she's gone up, what it means is that she will end up going higher. So your confirmation for a trade south will be for the price to break down below the nearest support level, which is now coming in between 103.20 and 102.80 on this particular cross. Otherwise, your only assumption and the most rational assumption that you can be making is that she is going to continue north, and it will be this block and it will be the movement of price around this block that will end up defining your risk for those long trades on this particular pair. Again, we haven't moved significantly away from the weekly opening price. The week opened here around the 103.60 area, and so when you see the week developing any kind of bullish momentum, then at that point you're looking for that continuation trade. If we look at GBP JPY, and again a very similar structure, but two levels to highlight on this pair. The first area that we're looking at is coming in here, which is around the 2880, 2890. It's around the 28 handle. It's around the 29 handle, 2890, that kind of area. And then just below that, we've got a support block which is coming in at the 28 handle, again, it's more a case of a technical play here. As long as you see the price holding above the 28 handle, then I don't think I would be shy to be playing along around that level. I think it does give a very, very good risk definition at that particular stage, just looking for the momentum to continue. If we're looking locally now, we've got our kind of daily opening range, which is here. Again, we've got our kind of weekly opening price, which is here. And ideally, you want to see a positive week, you want to see a positive day in order to be able to give that chase. So if we're just looking at the local level, once the price is breaking above 29.40, 29.50, that would be the time to really get interested in looking at that momentum continuing. But because we've had that strong bullish break, it's just a case of defining risk according to the nearest support and resistance level. Okay, let's turn our attention towards the Euro USD. If we're looking at the Euro USD, she's been flirting with a support block. This support block comes in around the mid 27s. So you can kind of see where is that? The low of that block is about 27.50. The top of that block is about 28.15, 28.20, and the price has just been flirting around that block. She did make an attempt to try and break down through it. Looks as though she's failing in that attempt, and so if we're seeing a break back above the 28 handle, then it may well happen that you're getting another push north on Euro USD. Now, generally speaking, I think that there is very much a case for exercising care in any positions which are being initiated right now. You're not seeing the kind of momentum breaks that we became accustomed to post 2007 and for the last pretty much 4 or 5 years. What we're seeing is much more conciliatory stage in the markets. We're seeing much more consolidation, and the volatility seems to have been pretty much sapped from it. What that has me thinking is to go much more for the intraday plays, to keep it tight, but to go with, at the same time, to go now with much less or with reduced exposure on any positions. And once we're getting momentum breaks, it will put us in a better position to be chasing. But generally on this pair now, Euro USD, as far as analysis is concerned, okay, she's flirting with this support block. It does look as though she wants to kind of break back above it, and that's fine too. But the real sign that we're going to be looking for is to find out whether the high that she hit above the 31 handle becomes the top of the range now in Euro USD. And I think that that is really going to be the critical issue, that what's going to be the new trading range on this instrument. Is there going to be enough confidence in the market? Is there going to be enough confidence in the market and enough confidence in the euro, despite with everything that's been going on here in the eurozone, and with Greece and Spain and with all those periphery countries, and in comparison to what's going on with the States, with this whole discussion about the fiscal cliff and potentially what can happen there if the budget does not get balanced, whether the market has enough confidence to kind of push this through and above the 31 handle and back up into the 40s and potentially into the 50s, or whether this becomes now a significant top in the euro, and the next stop to the downside is 20, and then the next stop after that is 110, then the next stop after that is parity, and then you've got 97, and that is where you're going to be looking for support eventually in the Euro USD. So really we're kind of waiting to see whether the rally, if there is a rally now, whether that rally gets sold. If that rally does end up getting sold, and then is this the significant top in Euro USD that everyone's been looking for? And the next stop on this instrument is much lower, or will it happen that she chooses to end up breaking through that? So lots of unanswered questions there. My own personal preference is still to be looking to the downside, to be looking for rallies to be sold. I very much suspect that we're going to get a range between this 28 handle and the 32 handle, and once that range is completed, we will have the price breaking down, and we will have her breaking down significantly. It's a theory yet which is yet to be tested and yet to be proven. It is still very early days, but as usual, it's one of those things that, if you have price expectation, once you see the price playing out according to how you expected it to play out, it does become much easier to trade. But potentially there could be a lot of pips still to remain on the downside of this instrument, and there is quite a significant pattern completion which looks as though it is playing out on this pair right now. As far as the local ranges are concerned, and as far as the local levels are concerned, I think those are fairly well defined for the time being. Like I said, it looks as though she's trying to break back above this support block. She's been flirting with it pretty much the whole of last week. So on an intraday basis, I guess that would would use that to establish the bias, and just the proximity of price in relation to the weekly opening price. If the week is breaking north, and particularly if we're near the open of the week, it does become quite easy to take that trade. But just take the caveat as said. It looks more like intraday position than something that you'd be positioning for over the long term right now. Okay. Let's turn our attention towards the GBP USD. It does look as though she's going to be presenting some rather interesting opportunities. The most recent momentum on this instrument has been to the downside, so if we're looking for resistance, we have our first resistance level here, which is coming in around the 59.10 handle. As long as the price is remaining below that block, she is a technical short. She's just falling off it right now. The next resistance level that we have just above that is at the 60-30 area. What I thought was interesting about this particular instrument is that we have had a trend line break, and so one of the prices that I would be keeping a key eye on is the breakout price here, which is coming in around 58.80, 58.70 level. If the price is remaining above the breakout price, then it does present opportunities for good technical risk-defined long trades. If it happens that the price breaks down below the breakout price, then you can expect further expansion to the downside on this instrument, possibly targeting 58, and if she's able to make 58, then there's no reason why she can't make 57.50. In particular, I would be looking at I'd be looking for that low to be retested in the first instance, and then a breakdown below that low. So that's just kind of marginally coming in just above the 58 handle, around the 58.20 handle, and then if she's able to break down below that, then you're looking at lower lows on this particular instrument. But we have had a trend line break. When you get a trend line break, the price that matters the most is the actual breakout price. Ordinarily, if you find the price is hanging above the breakout price, the trend line break will hold. If the price breaks down below the breakout price, then it's fair to be looking for extensions in the direction of the established trend. Okay, dollar Swiss. We had cause last week to be looking short at dollar Swiss. I hope many of you caught that. She was good to the tune of about 100 odd pips, pretty much the whole of the week, before she did that kind of end of week, end of day rally on that instrument, kind of closing and stopping those positions out. Nevertheless, as far as the overarching structure is concerned, again, we have that resistance block. That resistance block seems to be holding for the time being, and my general expectation again remains on this instrument that I'm looking for some kind of basing pattern to take place here, somewhere between the 92 and the 94 handle. The more waves that establish in this range, the more confident I will become that eventually she's going to kind of make a break north, and once she breaks north, she's going to head all the way up to parity and maybe even beyond. So, is that going to be our Christmas rally? I don't know. If you look back historically at the December month, usually we've seen huge rallies in the Euro USD during that month. Quite often we see significant falls in the dollar Swiss during that month. A few years ago, and in fact it's happened a few Decembers in a row, where Euro USD gave 1,000 pip, 2,000 pip rallies almost. So I'm kind of sitting and wondering, all these tight moves that we've been seeing over the course of the last couple of months, when she does break, is she going to burst? And if she does burst, whichever direction she ends up bursting in, you can expect quite a lot of momentum in that direction, which is why I'm kind of sitting and monitoring very, very closely, and I guess at that point we'll start chasing her on the daily. The key, of course, will be that when you start getting that momentum break, that you're not fighting it, or that you are not fading it, and always looking for it to continue. So dollar Swiss at resistance now. I'd be looking for a move back down to the lower end of the range here, still back down to the kind of 93 and through 93 into the 92 area on this instrument, looking for resistance to hold for the time being. If we get a premature break north, it'll be more a case of kind of sitting back, waiting for further support structures to be established, and then once they're established, we will be able to define risk and take entry on this. But for the time being, I guess the rational course is just to understand that it's a resistance block that she's in, and if she's sitting in that resistance block, you're either going to be shorting the instrument or you're going to be doing nothing. If you want to be going long, you really want to wait for her to break through that block, and at that point it becomes a sensible position, saying, well, the price has broken through resistance, therefore I'm going to be going long on this particular instrument. She hasn't done that. She hasn't done that just yet, so I'm going to be looking for her to continue in that range. Okay, let's turn our attention towards the pound Swissy, the euro GBP. Then we're going to take a quick look at the Kiwi. I'm pretty much flat now across all the pairs. I have a few very small running positions on various accounts, mostly on the euro GBP, but otherwise, generally speaking, flat, just waiting for the price structure to confirm signs of momentum before I'm prepared to give anything chase. Okay, we've got our pound Swissy here. So it's been a few months now, and the general breakdown has been that we want to be selling any rallies that we're seeing on the pound Swissy. That analysis is still valid, and that position is still valid. Last week we were using our downtrending trend line in order to define bias, and one of the positions which were taken was to say that she's sitting on the underside of this downtrending trend line a couple of weeks ago, and the general expectation was that she would end up breaking above it. We would get that overthrow situation. She'd fall back below it. She'd hit the underside. You'd get resistance being established on the underside, and at that point you would chase the instrument south. She has done exactly what was expected of her, and now the position remains that we're still looking south on this instrument. We are still looking for her to break down. What is it that is going to invalidate that? What would invalidate it is if the price were able now to break above that overthrow price. So that is coming in around the 51.40, 51.50 area. Technically, as long as the price remains below that level, the shorts remain valid on this instrument. The only issue I guess you're going to have here is going to be, how do you define risk, and how do you get that tight enough to kind of make it worthwhile. So whilst I'm all for shorting the pound Swissy, I'm not really for 150 pip stop loss, so in that instance, I guess it's going to be a case of just keeping an eye on that weekly opening price. It's going to be a case of looking at the daily opening price and watching the hourly break, and if you do get some kind of momentum developing, if you start seeing lower lows, you can give chase at that point as well. But really it's a case of kind of waiting and saying, okay, break down, let's see momentum develop in that direction. Once the momentum is developing in that direction, I guess it should become quite an easy decision to make at that point. Just note the kind of support block that we've got coming in here between 49.40 and 49.70. It is holding the price. It is holding the price right now. So if you're going to be aggressive, you may even attempt a fade to the line. You may even attempt a fade to 51.50 if you've got the heart for it. But otherwise, I think it's just a case of letting it break, and once it's breaking, it should become quite easy. It should become quite easy to give chase to. A little bit cautionary. I always have been with this pair at this particular stage. Just the reason being that you want to see her breaking. When she's breaking, then it's sweet. Everything becomes okay because she's behaving according to expectations. We're still getting quite strong rallies at the moment, and that's troublesome. We really want to see her dipping. We want to see her dropping, and once that happens, it'll become much easier to give chase. Similar kind of picture on the Euro GBP. Euro GBP is the only pair that I've still got active positions. I have a couple of active positions on a few accounts on this pair, but but nothing very significant right now. And I guess it's just a kind of wait and see policy now. As far as the analysis is concerned, the analysis is still intact. So I'm looking for an eventual price objective which is going to be heading into the mid-80s, 85, 86, 87 maybe even. So quite a significant move north from where the price is now. I'll consider that to be valid as long as the price is remaining above the 79 handle. But it looks as though she's going to, again, it's one of those things, it looks as though she wants to flirt around this area, and she may just kind of sit in consolidation for quite a while. So I'm prepared to wait and see. I'll say, okay, if I'm getting a break north, at that point I will start getting excited about this pair, particularly if we see a break above the 81.50 handle. So if it happens that she goes into consolidation here, you know what, that's all good. It's all good and longs are valid as long as the price is not breaking down below 79. If the price breaks down below 79, it's a case of sitting back and reassessing the price structure and saying, okay, and let's wait and see the price develop, and let's see what kind of overarching direction she wants to take. Okay, but if she's remaining above 79, the longs are still valid. It just looks as though she's going to start going into a range here. If she's going into a range, you don't want to be holding that exposure, because all that holding that exposure does is prevents you from taking another position on another pair, right? So there's nothing worse than being in a trade and it's 20 pips in the money and it's 20 pips out the money and it's 20 pips in the money and it's 20 pips out the money. You may be sitting on it like a position trade, but if you watch that often enough, and if you're as feeble-minded as I can be sometimes, after you've seen it go 20 pips in and out the money 3 or 4 times, the next time she's 10 pips in the money, you end up closing out the trade, and then the price breaks and you miss out on a rally which lasts for hundreds and hundreds of pips. Alright, so what I'm choosing to do right now with this pair is to say, okay, she looks as though she's going to go into consolidation. I will let her consolidate. If I see her breaking, I will chase the break at that moment in time, and I'm not afraid that, even if she ends up breaking 100 pips, if she's ending up above that 81.50 area, I think that it will be the last time that we will have seen 79 for quite a while. So at that point I will judge this to be a double bottom here at the 79 handle, and she's broken up to the 81.50 area. You get a little bit of a pullback, then the next stop will become 84, 85, 86, right? So even if I end up buying at 81.40, 81.50, it's not a problem. If I'm buying at that level, in fact, I would have a lot more confidence in getting that extension than you would at buying at the current levels, right? So 81.40, 81.50, at that point, that would be, as always described, when you're trading with the wind in your sails or with the wind behind your back, it would be once the price has reached those kinds of levels, and so that is what we would be looking for her to achieve in the course of the coming weeks. The analysis still very much intact, like I said, as long as the price is holding above the 79 area. It's just more a case of what is going to get me into that trade now, and the way that the price has been behaving recently, I'd be much more interested in seeing a break above that 81.40, and at that point giving chase, because there is a lot more to be played for to the upside on this particular instrument, if that particular once that level has been reached. Okay, last one up for this morning. Let's just take a quick look at the Kiwi. We were discussing Kiwi last week, and I had the general kind of expectation that the price would kind of come back and hit this 82.50 area. She promptly rallied to the tune of about 30 or 40 pips before dropping another 100 odd pips to the downside. I guess I was due to be punished at some point for taking a trade which had no technical foundation. It was just one of those which was based on that kind of raw gut instinct, and lo and behold, if you look at the rally that that kind of ensued from the tail end of last week, it seems now to be heading in that general direction. I just wanted to highlight this chart from a longer term perspective, that we have a support block which exists here on the dollar Kiwi, and that support block extends from around the 80-70 area all the way up to about the 81.20, 81.30 area. All right. And so from a technical perspective, as long as the price is able to remain above that block, then then there is a case for a longer term technical long on this particular instrument, okay, as a longer term play. If it happens that the price ends up breaking down below that block, that would be key sign that there is a more significant correction due on this instrument, and if it's not a significant correction, it could very well develop into a new trend. But it is the key area to be watching. It was one of the things that was playing on my mind last week when I kind of made that dodgy call. So if any of you took it, I hope you made the 30 pips. But I'm sure the south call on dollar Swiss and on pound Swissy and the long call on euro GBP more than kind of covered the 20 pip stop that trade would have cost you. So I am discerning of forgiveness, and I guess if anything, I've proven my fallibility by calling a poor one last week. Still very disappointed from it, but after 50 or 60 good ones, interspersed with some poor ones, you'd kind of expect that. But in any case, turning back to the key technical level, I think it's a block worth marking and keeping an eye on. If it happens that the price does fall below that, then that is the point at which the overarching structure on this instrument will change. One more kind of thing to say on the Kiwi, and I think this is quite important as well, is that if it happens that the price ends up reaching the high, alright, so we've got this high which is at the 83.50 area, alright, and if it happens that the price ends up reaching that high, and it may be messy the way that she kind of reaches the high, do not be automatically assuming on this pair that resistance is going to hold. All right, I think that's going to be quite key. I know we've seen it holding up quite well on a number of occasions, but it's just an assumption not to be making. So if the expectation once the price reaches there is that she's going to break down, then you have to let her start breaking down before you start taking those trades. And as far as risk definition is concerned, it's never going to be anything more than an hourly or a 4-hour bar in order to determine the amount of risk. So if it happens that you get a reaction off there and you've got an hourly bearish bar or you've got a 4-hour bearish bar, your stop loss would be just above that bar. And if the price ends up breaking back above there, certainly if the price ends up breaking above 83.50, then it would not be unreasonable to expect another extension north on this instrument. If we're looking at the commodities generally, they have been holding up and they have been faring pretty well against the dollar of late, and no reason structurally as yet to be expecting a change in that. All right, so we can kind of become happy sellers once we actually see it breaking, and once we see momentum developing in that direction, and once we start seeing real hardcore resistance being established. Right, so from a structural point of view, we're on quite a wide time frame here, I know, but it is that 80.70 to 81.30 area that you want to be keeping an eye on. Okay, folks, that's your lot. That's your lot for now. Like I said, it's been a long time since I've been flat in the markets. not a heck of a lot of positions open, just kind of waiting and watching the early part of the week. If I do end up taking anything, I doubt it'll be a position trade. More likely to be an intraday play. When it's an intraday play, just watch your exposure, keep the position sizes right down. Once we're seeing decent structure establish and decent momentum break, at that point we can start getting a little bit more excited. So for the time being, very much on the sidelines. It is all just about the direction of the week and the direction of the day. Right now. Next week we will discuss more in detail about the Euro USD and what could happen with that. I'll show you a pattern which looks as though it's due for completion. It looks as though we could have Euro USD heading in a downward direction for quite a lot of pips. But again, I think that's a discussion we'll leave till next week. And that's it for now. Thank you very much for attending. We do have a little bit of time. Actually, I'm just looking. It's just gone half past the hour. If there's any particular pairs anyone wants to have a look at, you can mention it in the chat, and I will have a quick look through for you, and we can just mark up any levels that are visible. But otherwise, I think I'm done for now. Right, Euro AUD. Okay, Euro AUD is an interesting one. We had a sine wave completion on the Euro AUD toward the end of last week, and the general expectation on the Euro AUD, as far as price behavior is concerned, is that actually I would expect any rallies now to be sold on the Euro AUD, and then for the price to break down and possibly head back towards the 22 handle. Again, it's going to be very much a case of keeping an eye on the proximity of price to the weekly opening price and to the daily opening range. Alright, so if it's being a down week and it's being a down day, you can chase it south. If it's being an up week and an up day, then it would be quite reasonable to be chasing it north at that time. But she has come and hit the T1, and because she's hit the T1, I would very much suspect that she's going to try and make an attempt for T2. As far as resistance is concerned, resistance that you're looking at is around the 2350 area. So I'd say, okay, as long as she's remaining below 2350, it is quite fair to be looking south on this particular instrument. If it happens that she breaks above 2350, then there is another trend wall that you can draw. In fact, there are a couple that you can draw here, and she will more than likely above 2350 be chasing the underside of one of these trend walls, and that would become a target to the north. That's if she's breaking above 2350. All right, so my kind of as far as kind of general analysis is concerned at the moment on this particular pair, very much suspecting that she's going to break down. She may consolidate here below 2350 before she does that. But my expectation would be back to the 22 area, back into the 21s before another attempt north. One of the things to note, I like these kinds of structures that you get at the end of a wave. I think we see them quite often. We've seen it on a lot of pairs. We've seen it happening on a lot of pairs recently. Sometimes it is quite a significant tell that you're getting something at the end of a wave, right? So just be a little bit aware. Just be a little bit aware of that. I guess it's a little bit of warning. She's kind of breaking down to that level, whether she's going to really breach that level. A few other places, if you're looking for that kind of structure, if you look at the Euro GBP, we kind of saw that structure on Euro GBP happen over here. and if you're looking at the Aussie dollar, scroll back a little bit. If you're looking at the Aussie dollar, it's that same structure again here. In each instance, that structure was an end of wave structure. All right. So if we're looking at the Euro AUD, if I just turn back towards the Euro AUD, you do have that kind of end of wave structure here. And I guess ordinarily what it would mean is I would exercise caution in the sense that is the price really going to kind of be able to break down below that level. But for the time being, you just mentioned that this fall looks corrective. It could well be corrective, but if she's been falling, the general expectation should be that she's going to fall further. And if she's rising, the general expectation is that she's going to rise further. She's falling down into you might say she's falling down into a support block right now. Right, so you can kind of see that support block right there. She's been sitting on the top of it, but ordinarily my expectation is when you get a sine wave completion, the price first drops down. To that center area, it drops down to that support block. Then it makes some attempts to rally, flags almost, and then she ends up breaking down. Further. We're seeing this similar kind of price structure on a lot of crosses right now. So here it is on the Euro AUD, but you've got a similar structure on the Euro Kiwi. So you can see that on the Euro Kiwi, and if I zoom out a little bit, you'll see that she did pretty much exactly the same thing. So we have our sine wave, and we have our sine wave. Once we've had our completion, she hits the underside. She makes the T1, she rallies a little bit, and then she starts falling further and targeting the T2. So kind of general expectation would be for the price to head back to that kind of 55.70, 55.80 area, right? But it's quite a well-defined kind of technical play. You'd expect the price to follow that behavior pretty much every time, and generally speaking, that is what she does. It's quite sweet to see the Euro Kiwi doing that now, considering that she stopped me out of a short quite early on last week as she was rallying, but nevertheless, kind of heading towards that sine wave completion. We're seeing that a lot on the Euro crosses right now. I would expect the same on Euro AUD. She hasn't turned until she does. I guess that's the kind of principle to be applying. So even if you're thinking that this is a corrective move now, and that she's going to burst north again and head back towards the 24 handle, I guess the issue would be to let her turn first. Once she has turned, then jump on board at that point, because then she will be doing what you thought she would do, right? And at the least, maybe just wait for the day to turn positive, or wait for the week to turn positive. And once the day has turned positive and the week has turned positive, it puts the technicals on your side, because if you're having an up day and you're buying, then the likelihood is that the momentum will carry on in that direction. So sometimes it comes down more to how you end up playing your price expectation than the price expectation itself. Right? My general expectation is that she's going to head on south. Her next stop is going to be around the 22 area. I think that will be key. But if I'm kind of playing that rally, my stop right now would rather if I'm going to be playing that, my stop right now would have to be around the 23.20 area. Similarly, if I were to be getting involved in a long, I would get involved once the price has reached 23.20. because then at that point she would be clearly above the daily opening range, and as well she would be above the weekly opening price. Right? So probably more a question of how you play your expectation rather than the expectation itself. If it turns out to be a corrective move, that's fine. What it really comes down to is how you end up defining risk before you end up initiating that trade. Okay. Okay, I think that's it for now then. Right, thank you very much, guys. Thanks all for taking the time out to attend this week. I hope you enjoyed the presentation. As usual, do take the opportunity to check out my website. It is www.tradingwithdeadlyaccuracy.com, or if you want a lighter version of that, it's wmdforex.com. Thanks again for all of you for attending in as well. Thanks to our host, FX Street, for providing the platform and the opportunity for the presentation. As usual, I'm here every week, 10 a.m. GMT, 10 a.m. London time, doing this presentation. So if you want to attend the next presentation, if you'd like a timely reminder, you can pre-register on FX Street and they'll send you out an email reminder just to let you know that the presentation's coming up, or if there's any changes to the schedule, you get email reminders for that too. See you all again next week. Thank you again for attending.